Hi, today we're going to be looking at the introduction to business combinations, and as part of that looking at least an introduction to the issues around the accounting for them. So let's bring in to this example two companies. We have company A and its shareholders. Let's call them shareholders B, and they own them 100%. And we have company C, who have its shareholders, and they own C 100%. So they have all the equity. Now, B and D may be one shareholder each. They may be thousands of shareholders. That at this point is not that important. Now, at some point in time, A decides to invest in C, so to take some sort of ownership in C. And what we're going to see happen is, in A's books, debit investment, let's call it the amount that they're investing X, so we don't have a dollar amount yet, and credit cash X. Now, it could be cash, it could be some sort of equity arrangement, it could be deferred. That's not that important at this point in time, but the idea is that A has made an investment in C. So A has bought some of these shares from D. We don't know the amount at the moment, the proportion of the shares. So let's just call it Z. So they're taking a Z percentage stake and they've paid X for it. Now, in C's books, nothing happens. If C had to account for every time one of its shares changed hands, there'd be lots and lots of things that they would have to do. So we don't have to worry about that. What we have to worry about from this point on is how we deal with this investment moving forward. Now, this has a lot to do with whether A gains control of C, or whether it gains a significant influence in C, or it gains neither. So let's just draw up a continuum here. Now, these numbers or these percentages I'm about to show up are not bright line percentages. You can have something which has more or less than one of these numbers and still have control or not control, or have an influence or not have influence. But commonly we see 50% as a benchmark for control. Now, if you're looking at a situation of 50% plus with control, then you're looking at a subsidiary. And we have to use the accounting as under AASB 10. If you're between 20% and 50%, you have significant influence, and in that situation what you're looking at is an associate. And associates will be looked at in AASB 128. And if you're looking at something under 20%, it's neither an associate nor a subsidiary. It's probably just going to be held as a financial asset, and it just gets treated as a financial asset, and you will have it dealt with under AASB 139. And if you looked at financial instruments, there are quite a range of standards that deal with that, but 139 is the one we'll use for the moment. So those are the areas where an investment can lie in. So it really depends on whether or not you have control, whether you have influence, or if you have neither of those two things. Thank you.